Hey, so this is your boy E White, Dark Horse Coins. Hope you're having a wonderful Labor Day. All right, so let's get to it. So today I just want to go over some historical analysis on Bitcoin. I think that this is something that everyone should pay attention to. So we're just going to look at historical analysis on Labor Day weekend, and then see how price actually, you know, react in the coming weeks or maybe months. Okay. And once again, this is not financial advice. So make sure that you guys understand that. And this is just an analysis and an opinion, and it's not giving you any targets, any of that. All right, so let's go back in time. And I already did some of the analysis for you, and it's going on a bigger screen. Okay, so let's go back time over here to September 2011. And this was during Labor Day weekend, and then this was the drop. Also, we're on a 3 day chart, so every candle is 3 days. All right, so we had a 74% drop. All right, we had another move that eventually we moved up 15% in 2012, and then we finally had a 26% drop after that little rally. All right, and we had this drop back into the October, and then from October we made a rally. Here, once again, Labor Day weekend had a 32% drop going into the first week in October, and then we went on for the races. All right, then we got one right here on September 2014. We had a 69% basically drop. Uh, Now, this one ran all the way up until January of 2015, and then we started to see some form of a relief. Now, this whole entire period, basically for a whole year, we just really moved sideways. Had a nice little dip right here. All right, and then we rallied, and then we dropped 9%, and then went on to go, you know, make some yearly highs. We started moving pretty good. All right, and what year was this? This was 2015, and then we got 2016. We just had a shallow 5% pullback, and then we moved and we rallied on up. And then now we're in 2017. We had a 36% drop, and by by October 4th, we're starting to move up. And that's when we had our actual all-time high at the time in 2018. Okay, and then we dropped, and then here we go again. September 2018, we had a nice little drop, and I took this one off. So let's see. All right, we dropped 58%. All right, and then we went on the rally, and then here on 2019, we had a nice drop off, 65%. All right, and then we had a night, and then here, this is September 2020. And this is a real shallow drop, about 15%, and it went on a rally. Then you got 2021, and we had a nice little shallow drop, about 26%. And then we went up and we made that second attempt for the all-time high, and then of course it failed after that. And currently we are now here in 2022, and what would the fate be? So what we can do is we can look and we can see that we have a few things that's shaping up on the chart. We have a nice little bear flag pattern that's showing up already. This flag is already broken. Boom. Here, there, and we've already breaking this. So we have this downside pressure that'll follow through. And let's do this. And we could take this and we can move it like that. And this is where we're looking at. So this is around 13,600 region. All right, and let's do this. Let's see if we can see where we possibly can have some retracement levels from here on up. See where that put us. All right, so let's put us right in between the 78% of the Fibonacci retracement and also the 88%, which put us around 12,256. All right, now let's look at some order blocks. And off these order blocks, which will be our demand zones, we need to see, because we had some imbalance here. And the question is, are there unfulfilled orders still sitting into this imbalance? All right. So we basically was moving sideways. We break, and then we had a nice little rally to break out of here. But if that is still a key area of where price possibly could come back into, this is a key zone right here where we may get price to come back into this area, pick up some remaining orders, and then we can start making our way up. In reality, we really want to see Bitcoin really start moving sideways. Like this move sideways, we wanted that. Of course, we had it here when it dropped, but we really need to get back down into this region, especially for some of you newer people that's coming into the market. This is a great way for you to accumulate. Now, I'm not going to sugarcoat anything. Economy is bad, a lot going on. You may not have the disposable income, so I get it. But what you can do, if you are going to get some tax returns, maybe see if you can do something with that. Once again, it's not financial advice. So, but if it was me, that's what I'll be looking and seeing if we could save and cut back, because I believe the market's going to give us a gift, really, and especially with the altcoins as well too. All right, this move right here we really need to look at, because it could be shaping up what we are expecting. So you see right here, we had an order block. All right, price came, broke out. All right, and then institutions came right back down. Well, not institutions, but whales and crypto. Right, whales came back. We were filled. All right, so we got this nice little wick. We know that big players can only ones that create wicks in the market, not retail, not you. You do not move markets. So we get a nice little rejection. We get in here. Remember the concept. When price leaves out of this zone, think of it as children at a school where they have to have multiple buses to take them home. All right. The first bus did what? Left the school, dropped some kids off, come back. We got to pick up our second load. All right. And then now we're dropping off kids up to the upside. So can this zone come back like we just saw from over here? All right. And can it come here? Absolutely. Does it mean it's going to do it? No. But this is a key area to look at, and don't be alarmed. Okay. It's my honest opinion. Crypto is really not the markets to try to trade per se, but it's really for accumulation. If you got some solid projects out there, if you've done your homework and you feel that they're going to be around 5 to 10 years, this is going to be a gift if this market can pull back all the way down to these levels. Okay. Of course, I've already given plenty of upside targets. And what I would do, since I'm on a daily, I did do some fractals at one point, but on this one, I'm just going to take it from the 2015 August up to the 2018 high, and I'm just going to measure to get us an impulse. And already one has been hit. So guess what? Based off of this impulse, we have got 1, 2, 3 fib levels have been hit as far as targets. The remaining levels that are still intact is the $83,317.25 region and 105,176 region. Okay, so those targets are still intact for the upside. Okay, now let's look at our Bitcoin log growth, and let's see what's going on with this. Now, remember, as long as we're below this lower band, this is an area where we definitely should be accumulating. Like right now, to me, I would be starting to accumulate and move in some. Yes, I'm using a little bit more advanced technical analysis on some of these, where I am patiently waiting for certain key levels to be hit. But once again, if you're new and you really understand some of these projects and stuff, we can't really time bottoms and we can't time tops, but we can use some tools and things to help us get within a range. And right now, this is considered accumulation zone. Anytime we're below this level, and as you can look back in the past, we've been below this level. This is what you don't want to do. You do not want to start buying when price gets above this yellow band. You want to buy either near it or below it. And right now, we're below it. It's no better time. All right, look right here. Let me take some of this stuff off for you guys so it's a little lot clearer. There you go. I'm sorry. All right, nice little opportunity. We're near another opportunity, another opportunity. All right, we get close. That's near. That's near. This is near. We can do this. We don't want to be buying here. We don't want to be buying here, and we definitely don't want to buy at the top bands. We definitely don't want to buy at the top bands, right? So, in this little short history on this chart, we see that twice we'll move up to this band, and of course, we got down here again. We rallied. All right, we broke. Of course, we know what happened in March 2020 with this to get us below. But once again, we're below again. And what we want to do is we want to be able to accumulate enough to where when we get back above here, we can either scale out on our way up, but we're in a way better position than if we were trying to buy up here. Okay, so all right, so that's that on this analysis. And like I said, you can go back and look at historical analysis. I like to do a lot of historical analysis on various assets. So I will be pumping out some more videos on some analysis on other asset classes as well. So you can see some seasonality, holiday historical analysis. And we can also do a historical analysis based off of midterms, re-election year. All those things matter because humans, we're predictable. We have patterns, and we can take advantage of that of being contrarian investors. All right. So y'all make sure hit the like button. Please subscribe. All right, and let's make this thing happen. I hope y'all enjoy the rest of your day. Y'all be safe out there. May the horse be with you.